When I was younger and first got into the markets, one of the things that I would look for would be a commodity that I thought was really, really cheap. And if I buy this commodity, I can sit on it. If I sit on it long enough, I'm going to make money. The problem is, if I'm early, I begin to get impatient. And as the market is either stagnant or starts moving against me, I'll generally have a tendency to begin to try to manipulate the market. Let's say, for instance, I buy corn at $2 a bushel. Or better yet, I'll give you an actual example. One time I bought corn around $2.40 a bushel. And I was just convinced it was going to go higher. And over the course of time, it went down to about $2.30. Well, if I buy 5 contracts at $2.40 and now it's at $2.30, I may as well buy another 5 contracts, because if it's going to go up from $2.40, it'll go up from $2.30. And the next thing it's at $2.20 and I bought some more, and the next thing it's at $2.10 and I bought some more, and now my losses are beginning to weigh on me. And even though I may have the money financially to write it down to $1.50 or $1 or whatever it is, psychologically it begins to break me. I wake up in the morning, and after doing this for about 5 or 6 months, I wake up in the morning and I'm saying, I'm tired of waking up in the morning realizing I got this burden. I've got this $40,000 loss sitting over here. And what happens is, somewhere along the line, one day you either hear a news article or you hear something that tells you the market's going to go a lot worse yet. And even though in the very beginning you knew better than that, now all of a sudden you've lost your confidence and you begin to believe maybe it's going to go lower. And somebody convinces you, or you hear a news article and you say, well, if it goes as much lower as they're saying, I'm going to lose another $30,000. I may as well get out, put it back on when it goes that much lower, and then I'll write it up. And so you get out of this position, and the next thing you know, it starts going up right away. What it did was psychologically break you. It put you in a position that emotionally you broke down. And all of a sudden, here's this situation, you no longer have the position, and you're saying, well, now when it goes back down, I'll just get back in where I was. But what happens is it's as if it never goes back to that position. You never had that opportunity again. And the market goes up to where you thought it was going to go, and then it's all over. You missed it. And you look at this deal and you say, I lost $30,000 or $40,000. How did I do this? I was right in my analysis, but I lost money. That's the problem with people not understanding themselves. That's the problem with people not understanding that emotionally, many times they don't have what it takes. Even though that plan might have worked, and even though there might be 5% of the population that can actually do that and get away with it and would make money, for so many people that doesn't work. They don't have emotionally what it takes. One of the things we want to do when we talk to people is help them understand themselves. Take them through scenarios. Let them tell us what it is they plan on doing and want to try doing, and we can maybe look at that and say, well, here's the pitfalls, here's what's happened to other people. Maybe you can do it. We're not going to talk anybody out of doing that if they want to try that, but at least show them the pitfalls and show them and get them to understand that most people that try that approach can't do it unless they're doing it with such a small volume that emotionally it does not bother them.